Hi guys, and welcome to my channel. If you're new to this channel, hi, hope you are good, and yeah, hope you enjoy the content. If you're a returning soldier, thank you for coming back. Thank you guys for the support. We're halfway through to our target. Remember, we're going for 100 subscribers before the end of this month. And yeah, man, we're halfway through. Thank you guys for your support. Thank you for sharing. I know some of you have been sharing on Instagram, some of you have been sharing on Twitter. So yeah, thank you for sharing. Please let's continue to share this channel with friends and family. I know I share pretty useful content. So yeah, without wasting any more of your time, today we're going to be talking about how to increase your probability when you're trading. So how to spot high probability setups. How but high probability setups, right? And this is a continuation from the videos that I've been posting or that I've posted in the past few weeks. So we talked about identifying key levels. Right? Major levels versus minor. Sorry about that. Versus minor. Then we talked about trends and being able to identify a trend. So yeah, basically this is what you need to do, or this is what you need to know to be able to grade your levels, or sorry, to be able to grade your setups, right? You need to know your key levels and you need to know your trend. So in the previous video, when we talked about trends, I did mention that each and every time frame can have its own trend. For example, it is possible that you will find an uptrend in a higher time frame downtrend. It's possible that you will find the opposite, right? But as with minor and major levels, the higher the time frame, the more reliable the trend is. So the higher the time frame, the more reliable your major and minor support is. And the higher the time frame, the more reliable your trend is. So we're going to be talking about multi-time frame analysis in this section, right? And literally, when we're talking about multi-time frame analysis, all you need to be doing is analyzing three time frames. So you have in under 3 time frames, you have your main time frame. This is where you get your main trend, main direction. Then you have your second time frame. This is an intermediate time frame, and then you get your third time frame. This is where you get your entry. So on your intermediate time frame, this is where you're going to be setting targets. right? And then we'll talk about entry in another video, in the coming video. But basically, this is what we're going to be talking about. How to identify high probability setups. Number one, you need to identify key levels. Number two, you need to be able to know in which trend you are in. And then this all goes down to multi-time frame analysis. You use 3 time frames. You shouldn't use more. And then you have a main time frame, intermediate time frame, and a lowest time frame, which is your entry time frame. So reason why we use multi-time frame analysis is so that we can gain perspective, right? One time frame cannot tell you or paint a picture of what's happening in the market. Like, you need to look at different time frames for you to get a clear picture and a clear vision. So on the main time frame, you can use, well, any time frame because price is a fractal, but what I found to be true is that the higher the time frame, the more reliable the setup, or yeah, the more reliable the setup will be. So for example, in my preference for the main time frame, I'd say use the daily or the weekly or the monthly, depending on which type of trader you want to be. If you want to be a swing trader or an intraday trader, I would suggest that you start with the daily. If you want to be a swing trader, start with the weekly. If you want to be a position holder or position trader, start with the monthly, right? So yeah, it all depends on the type of trader you want to be. Sometimes, let's say you're a scalp trader, you would want to use the 4 hour as your high time frame or your main time frame. It's fine. I just don't recommend. This is for probability, by the way. So yeah. First things first, we identify our key levels. Remember what I said in the first video? We look for points that stand out and then we highlight them. This is how we identify key levels. And then we'll look for examples on other pairs. Yeah. So for this pair, we're using CHF JPY, and then we are going to use the monthly as our main time frame, the weekly as our intermediate time frame, and the daily chart or the daily time frame as our entry time frame. And then yeah, hopefully we get a setup so that I can get in and then show you the results afterwards in the Telegram group. I'll post a link to it in the bio. I'm in the description box. Yeah. Use your line chart. Yeah, so anyways, this is a level right here. This is a zone. Right? And then we have your high. And then you have your low. Let me do this. So we are in, okay, we've identified our key levels, right? And then so let me label so we on the same page. This is major resistance. Because what's major resistance or major support? It's a level where we expect a trend reversal. And then this is major support, also known as your high and your low. So what I said in the previous videos, I said price will always move it in between a range until we get a breakout. Okay. So this is the level right here. Let me delete this so we can know exactly what's happening. So it's a zone, right? Because we want to decide on our next move. Yeah, that's it. So let's start from support. So we found support from the Dow bottom, and then we broke this high. So this became our new higher high. Market came, the low was higher than our previous low. So this is our new lower high. And then we found a higher high, the lower high. Let me just highlight it. This is a lower high. This is a higher high. Then the market came to this point. So we got 3 consecutive higher highs and then 2 lower highs, right? And then the market from our major resistance came and broke the structure over here. The market came and broke our previous higher high and also came and broke our previous higher low. Yeah, previous higher low. So this is a higher low. Sorry, it's not a lower high, but it's a higher low. So this became a lower high. Why? Because this high is lower than this previous high. This became like a lower low. Why? Because the low is below our previous high, right? So we're not yet in a downtrend. Why? Because we haven't formed in another lower high. So for all we know, the market could come to this level. I don't want to ruin it, but yeah, the market could come to this level and then continue going up for all we know. So until we break this lower low right here, there's no telling if like we are going to go to a major support. Okay. So direction wise, we are in, okay, so let's say we're in a downtrend. This is an impulse and this is a correction. In the previous video, I don't think I explained consolidations properly. So I said that a consolidation is a directionless market, right? But like, I didn't explain where we find consolidations. So a consolidation can either be a correction. So let's say you're in a downtrend. So now we're consolidating because price is moving in between these two ranges. Right? A consolidation could either be a correction phase of the market, or it can be a symbol of a change in a trend or a change in sentiment. So for example, also here, we were in a consolidation phase. So the market came here, and instead of going low, it formed new highs, right? So yeah, that's what I wanted to say. Now we're in a consolidation phase, right? We came with here with a impulse move, and then we wanna understand if this consolidation phase is a correction, or we're going to continue, is a correction to the downside, or if we're going to continue going up. So for now, on our higher time frame, our main direction, okay, one last clue. We are on minor resistance. Now you're on resistance, right? We're in a consolidation phase where the equal amount of buyers and sellers. So we can get away with buying high, I'm selling high and buying low until we get a breakout. So that's number one. Can I do this? It looks messy. Let me leave it like this. I'm sure we'll find a level on the lower time frame. So direction wise, here we've established that, okay, we're in a uncertainty phase. Like, we're not certain of where we're going next. Why? Because we just came down with an impulse move. I'm not sure if this is a correction or the market's going to continue up. And then another clue, I'm not sure if it's going to be valid or not, but there's a trend here. It looks messy. There's a trend here. Yeah. So either the market is going to be, okay, let me do this. Yeah, it's fine. So either the market is going to be too congested here to a point where the buyers break through, or either we're going to get sell confirmation and then retest this level. Right? Because this, yeah, never mind. Doesn't make sense. But yeah, okay. Let me continue. So we had minor resistance. So on a lower time frame, this is what we see. So we're in a consolidation phase, and this is this could be major resistance on the weekly, and then this could be our major support on the weekly. Why? Because every time the market reaches this level, there's a trend reversal. So here we were in a downtrend, clear downtrend, impulse correction, impulse correction, impulse. And then there's consolidation that I talked about. And then because we were on major support, we got a trend reversal. So now we're in an uptrend, impulse correction, impulse correction. And now we are seeing that sellers are trying to come in, right? So first, to confirm whether or not we'll be in a downtrend, the market has to break through this level right here. So remember in the previous video, I said that if you're not sure of your levels, use a line chart to get a more satisfying level, or a level that's average. So yeah, from this resistance right here, the market could come to this level. So here, this is where we talk about confluence, where multiple time frames are saying the same thing, right? This is how you get high probability zones. You identify your key levels, you identify your trend, and then in you identifying the trend sharp, you use three time frames, sorry, use three time frames, right? And then we look for confluence. So are those three time frames saying the same shit or telling the same story? Right now, on our monthly time frame, we just concluded that okay, because this is minor resistance and we could be in a downtrend because we just hit major resistance, and this consolidation could be a correction of some sort. It could be going to the downside. Now we just confirmed that on a lower time frame, this is major resistance, right? And then what does major resistance do? It causes a trend reversal if you're in an uptrend. We were in an uptrend, yes, and now we are in a phase where we're trying to establish if we're going to get a trend reversal. Clean. So now we can all agree that the market is approaching the downside, because also when you're looking at the candlestick patterns, it's telling you the same thing, right? This is our diagonal SNR. So you got our first test here, and then market was consistently making like higher lows. So the market could retest this level right here, our diagonal support, and find support at this level. If that happens, we get our third touch, and then the market could go up again to this level. So if the correction or the consolidation phase was not supposed to be what you call an impulse move, either we're going to go to the upside and then break this level and then blah 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 blah. But then also the market could come here and then break this level. We're just waiting on the market because we don't want to assume, waiting for confirmation. But this is what's going to happen. The market could come to this downside and then we get confirmation, right? So we want, let's say you want a trend now. You got your direction, and then on the intermediate time frame you got your targets. Meaning that if you're selling, these are your targets. This is your first target, this is your second target. So now we're looking for an entry. And we're going to be talking about entries more in the next video. Let me just adjust. So let's say you are waiting for the sell. So now we're looking for an entry on a lower time frame. So for us to get an entry on this pair, we have to first break this level or break the structure over here. So you find when you go back to the definition of what I said is a major and a minor level is a level that's found on lower time frames and is expected to get broken through eventually. I said that they found on lower time frames, right? So obviously let me change colors. Or blue. We use purple, yeah. So say for example, not for example, but this is our monthly resistance versus daily support. What do we expect the market to do? We expect the market to eventually break it, right? This is what we expect. If we do get that in reality, we should wait for confirmation. So if the market breaks this level, like we're expecting it to, we should get a retest here, a retest somewhere here, of course, rejection or what. And then eventually we gonna sell. So that's how you decide on a course of action. You've identified your trend on a higher time frame, identified your targets on an intermediate time frame, and now we are deciding on an entry criteria on a lower time frame. Let me use another pair, and then we're done. And let me see this, and then send it in the Telegram channel. Then we use it for reference if we are right or wrong. But yeah, guys, this is how you score high probability setups. There's steps in how, or there's a system in how you identify an opportunity. There's time frames, and every time frame has a specific duty. First time frame's duty is to tell you where the market is going in the long run. The second time frame is for you to decide, okay, if the market goes to this direction, like I saw in the higher time frame, where are my targets? The lower time frame is there to help you decide on an entry or a trading plan. Like, what should you wait for you to jump onto this opportunity? Should you wait for a break on minor support and then enter at minor resistance? Like, do you get the picture? If you don't, please send me like an SMS. Not an SMS, but a DM. A DM. Yeah. So the same thing here. Let's use this as um, our main time frame. So this is our high, and it's obvious that we're in a long-term uptrend. That's like there in your face. Right? And then this is your low. And then we are on. We haven't gotten a trend reversal yet. Oh no. Let me go back. Let me go back to the daily. And then you go back to the definitions. If we just hit a major support, what do we expect to see on major, like, or if we just hit major resistance, what do we expect to see on major support, on minor support, on opposing minor support? We expect the major level to overpower the minor level. And this is what we got here. We got a break, right? So now it seems like the market is coming back, and this was supposed to, if we gotten like an additional candlestick, this was supposed to be like confirmation to the downside. Now we're seeing high pressure in the market. Yeah. So let's go on to lower time frames. So in the higher time frames, we've established in an uptrend, the market came, broke our previous higher high, and then now we are here. So we wanna what you call, we wanna understand what's happening here by gaining perspective on a lower time frame. So the key word here is perspective. This is why we use multiple time frames for perspective. Sorry. So remember to use your line chart in drawing these levels. So yeah, from what we see, either the market will go back here because obviously it's support, right? Obviously either the market will go here because it's respecting the support, or yeah, what's going on? Or we see a movement to the downside. Um, just realize that there's also support and resistance here. I think it will be more clear on the lower time frame because it's not so significant on the higher time frame. Remember, when we talk about key levels, we talk about levels where a drastic turn has occurred. or a drastic turn, not necessarily a change of trend, a drastic turn. That's why in the first videos I mentioned that when you're identifying key levels, the first thing you should know about key levels is that they stand out and they are obvious. So this one in the middle is not so obvious, right? So that's why I said that it could be on a lower time frame. So let me do this. We're going to move it on the daily and want to see how it will look on a 4-hour chart. So in a long-term uptrend, if you get confirmation to buy, it's a higher time frame. Why? It's high probability. Why? Because in a long-term uptrend. But as soon as we reach this major resistance, we have to now reverse. So we got a trend reversal on the higher time frame because we hit my major resistance, and then we broken these highs. So now this is the 4-hour. This is according to the 4-hour, and we got a great impulse move to the downside. So for every impulse there has to be a correction. So this right here could be correction from what we're seeing on the lower time frame. Or yeah, from what we're seeing on the 4-hour, this is a correction. So the market could come to this level. Yeah. And then do this. So we'll use this as our first take profit. And then this. Or if we get a break from this level, right here we expect a retest. And then if we come back to this level, we have to wait for the market to tell us if it's gonna break this level or not. From what I'm seeing on the lower time frame or the intermediate, this is what I'm seeing. A push to the downside broke also the previous higher low. And now we came with a strong impulse, and now the market could be correcting. Let me go on to the 1-hour, which is our entry time frame. So for someone who would want to take advantage of this opportunity, they could be like, hey, yo, but we're on a higher time frame, a higher time frame. So you got to know our direction, right? So for someone wanting to take advantage of this opportunity, they could be like, hey, yo, but we got like confirmation that we are on, the daily minor support. So we're on support. And then we just said that because we're in an impulse, we expect the market to retest this level. On the daily, we see that, okay, we're in a channel, and then we can expect movement to the downside. So for someone, this could be an opportunity to buy, right, because of that confluence. So yeah, basically that's what it is, confluence. But for me, I don't think it is because, like I said, this is major resistance. We expect a trend reversal, right? Sometimes that's not what happens. Sometimes you hit your major resistance, and then the market goes to the downside, breaks. But because the market behaves the way it wants to behave, sometimes you'll find that the market retested and breaks in form highs. This is depending on what's happening on higher time frames. So, like I said, the more reliable, the higher the time frame, the more reliable it is. So, in this case, the weekly and the monthly time frame could be more reliable than what we're seeing on this small time frame. But yeah, this is what I'm seeing. So for me to enter into this trade, right, I have to get like confirmation. So when the market comes here, I'm not selling. I'm only selling if it breaks this level and then retest it. So it comes back to retest the trend line. It also comes back to retest this higher time frame minor support now as a resistance. And then this will be my first take profit. Like I said, this will be my second take profit. So that's only when I'm willing to sell. If we do buy, the market should at least give me a strong candlestick, an engulfing candlestick showing buy movement. So you must break through this level right here. Retested as support. Let us see a time frame. So yeah, with the market on the daily though, if we break through this with a strong daily close and then we retest it on the 4-hour, maybe I will believe. Let me remove this because I said I don't trust trend lines. But then if we do retest this, so let me delete this. If we do, let's say I get this. If we do, and then I'm taking profits. Yeah. But according to what I'm seeing here, an impulse and then a correction, I don't see this happening, right? But yeah, we just have to wait for the market. So this is what I had for you guys. This is what I had planned for you guys today. Basically, for you to get high probability trades, you need to know your trend, need to know your key levels, and need to find confluence within 3 time frames. Use one time frame for your main trend, the second time frame to set your targets, and your third, your third time frame for your entries. So we meet again, guys. Please don't forget to like, share, and subscribe. Also, check out my Telegram channel. I post there. I'm not consistent, but I try to post, give updates, and then yeah. Also, guys, I'll be doing a lot of market breakdowns. I've been doing those on Instagram, but I want to move those to YouTube. And yeah, I'll be sharing setups, my thoughts. If you want to make money from those, use them with a bit of your knowledge. And then yeah. Thank you guys for tuning in. Until we meet again. Bye-bye.